let's do this because tomorrow night after the close, we got Microsoft and Google. You want to look at both. You actually think they have the potential to go shortly different ways here. The interesting thing about Microsoft, and I think the guy's point, is this thing almost got back to its 52-week high here. And I know you're going to kind of chart that a little bit. The implied move in the options market is about $12.50 in either direction between now and Friday's close. It's about 4.5%. That's not a small number on a $2 trillion plus market cap company here. So talk to us, Carter, what you're seeing in these two charts.
Yeah, Microsoft, but also NVIDIA, Apple. We're seeing some churn. I think everyone knows that. But if we were to look at Microsoft in the context of Google, obviously you have, if you were to call it this, a bottom that is in. Many people would argue it that way. But independent of that, we're just too far above the 150-day moving average from my point of view. So my thinking is that we check back. So keeping this same chart, let's annotate it differently. Look how precise the intermediate high of just the past 2-3 weeks is with the high going back to August, which was an important high for the market. Draw the lines another way, call it a double top. Now, if indeed, and we are stalled and it's having a very bad day today, if indeed this is what the arrow implies, where might we be headed? Well, if you extend the 150-day, and there it is, I think 265 is a reasonable sort of intermediate price objective for Microsoft from here.
I think that's right. I look at this and say, for me, you call it a check back. Other people call it mean reversion. Dan, I think that's exactly right. And Carter extrapolated that 150-day moving average, which is probably exactly the right thing to do to try to find a level. And then the question becomes, okay, we get to that level. Are we going to do an overshoot like we obviously did in the fall to the downside? Or is it going to stop there and bounce like we did probably late February, early March? And that's the rub. But to look at this and think we're just going to blow through the upside and continue this pretty parabolic move, I would submit, since, I don't know, January. So I don't – listen, there's a chance that happens, absolutely. But I put it as sort of a 1 in 6, 1 in 7 chance.
Yeah, and I just say this, that one of the most important things I would just say is, but look at where interest rates are right now and look where they're likely to stay. And if you think about from a valuation standpoint, I mean, for this stock to meaningful break out and go higher in this rate environment with a economy that seems to be, muddling along here, you would need a really important beat and raise. Because if you think about it, I know, Carter, you don't give a crap about the fundamentals. There's a lot of enthusiasm, in this stock right now that has entered this stock since the start of this year regarding their ability to integrate OpenAI, this large language model, into their productivity suites, into their search and that sort of thing. And so to me, which is why I think it's really interesting that both of these companies are reporting tomorrow night. That would also be Alphabet. And both of them used to be compared for a whole host of reasons, having nothing to do with search, having a lot to do with what the growth rate was of their cloud businesses. Mm-hmm. You know what I mean? So on the flip side of this is that Google, or Alphabet, was very volatile, and it was actually seemed to be on the other side of the excitement around Microsoft. You know what I mean? The stock had a pretty meaningful sell-off beginning the year when they failed to kind of launch their product in a way that made investors feel good about it. So talk to us, though, because Alphabet's gained some ground back here, Carter, and it's right back towards those kind of early February highs. And let us know what you're thinking here.
Right. So whereas Microsoft has clearly exceeded the market, has been an outperformer, not only to the market, but to the Qs. Google is the opposite. Now, there's a trend line drawn to some extent. Again, it's subjective in the eye of the practitioner, mine in this case. But if we were to draw the lines another way, if we were put in the 150-day moving average, and so you can see that I think this is an earlier stage, whereas Microsoft's been exploited the potential. This hasn't. And just to really put it together, if we were to do a comparative chart of the two, that really is the story, right? So that, and while they're different businesses, everybody knows this, you're talking about a pretty good spread there. This is just a comparative 2-year chart. One stock being up 600-700 basis points, the other being down. And so my thinking is that you actually do it as a pair. And I don't know if we have them. We might have some. So these are, instead of, let's go back one, that's a comparative chart, the two stocks. You could also look at a ratio. So it's one line, it's one divided by the other. So this is Google and its relative performance of Microsoft. Now let's put some lines in. That's pretty interesting. We've gotten down to the lows and now put in the 150-day moving average. Now, while we're not a turn yet, I think you jumped the gun here. I think Google is the play. I think the street considers Google cheaper than Microsoft, but I can leave that to you guys. I just think that, one is pretty loved and has come a long way. The other is a laggard that has catch-up potential.
Interesting, because Dan put this trade on, and I think the levels were, and Dan will correct me, but I think Microsoft was 270-ish. Google was about 91-ish. Sold Microsoft, bought Google. It wound up being that the Microsoft portion worked better than the Google portion. I think Google may have gone to 92, 93, but Microsoft had a couple days in a row where it really cascaded lower, and then you subsequently took the trade off. This trade can work for a number of different reasons. I happen to think both sides are going to work this time, where you're finally going to get that continued bounce in Google. It has bounced, but I think you're going to see that continuation to the upside, and this can continue to work, and Microsoft going lower will accelerate this ratio. So I think you're right when you say jump the gun, get in front of this, and I think that's the right thing to do, Dan.
It's funny, if you did business with a fancy structured product desk or something like that on the street, and you can say, I want to construct this, I want to buy this chart right here. It's a good looking chart, and it's a good thematic trend, I think, to play here. So thanks for that.